Hello, gentlemen. My name is Greg Michalowski from ForexLive.com. I'd like to take a technical look at the Euro versus US dollar for the week starting July 17th, 2016. Well, I want to start off by taking a look at the daily chart here. And why do I want to look at the daily chart? Well, I want you to focus on what has been happening here over the last 15 months. We've seen the price move to the downside, upside, downside, upside, downside, upside, downside, upside, downside, upside. And if we take a look at the midpoint of that range over the last 15 months, if you take the high price and you take the low price, where does the midpoint come in? Around the 111.15 level. And in trading this week, what did we see? We saw the price move above that level, that 111.15 level, and we also saw the price move below that level. If you figure out the last 4 or 5 days right here, you can see how the price moved above that 50% and then back below it. And so we traded all around the midpoint level. That suggests to me that the market doesn't really know which way it wants to go, does it? It doesn't know whether it wants to go to the upside, does it want to go to the downside. There's another line here that is of interest, and that is this green line. That represents the 200-day moving average. And I know we've been talking about this 200-day moving average for a while. Why? Because we've been kind of above it and below it all through periods right here, like here, right here. We kind of held it. We went through it right there. We held it right here. We found support against it right there. We found support against it right here. And over the last month or so, the market's been above and below that 200-day moving average, that green line in the chart, as you can see through this yellow area, above and below it, above and below, above and below it. Again, that represents to me that the market doesn't really know which way it wants to go, just like around the 50% retracement level. And so where are we currently trading right now? Well, we're currently trading at 110.69, which is below the 100-day moving average at, let's call it 110.90, and below the 50% retracement at 111.15. Right? And so we're ending the week a little bit more bearish because we're below the 50%, below the 200-day moving average. Would you agree? I hope so. The other thing that we could see here on the chart is that of these failures right here, we failed on times above it, we failed on times below. So ultimately, for the euro versus US dollar, we're not going to just stay in this 15-month trading range. At some point or another, we're going to make a break either to the downside or we're going to make a break to the upside. And we need to know which way it's going to go. And as long, so in next week's trading off the daily chart, as long as we can stay below this 15 level to, let's call it 111, around 111.90 to 111.15 level, that would be more bearish, right? We would expect that the price would rotate further to the downside. It may go to there, it may go to here, it may come into this yellow area where we have a bunch of swing lows, and ultimately it may break to the downside right there. So as long as we can stay below that level, that would be more bearish. If the market should try to go the other way, we would see the price move above this 15 level and then move up to, let's say, the 100-day moving average. That's the blue line of the chart, and start to move up toward our yellow area right here. Get above the yellow area and move higher. And so the key level for trading next week off the daily chart is going to be this area right here, just between the 110.90 level and the 111.15 level. And we're going to kind of hope that the market next week decides to move away from that area. Move away from this yellow area. I don't care if it goes to the upside. I don't care if it goes to the downside. I just want it to move away and start to move toward extremes right here. Okay, that's going to be the trade that we're going to be looking for. So remember these levels: 110.90, 111.15. Now I want to go to a different chart here, and I'm going to go to the hourly chart right here, and I'm going to put a horizontal line or a line across where at the 110.15 level. That's right here. Remember that level from our daily chart. And we can see that in trading here today on this is the hourly chart, the market came down to that 111.15 level, not 110.15. 111.15 level, moved to higher, and then we broke through that level and moved lower. And in the process of moving to the downside, what did we do? We went below a bunch of technical levels. Technical levels defined by the 100-bar moving average on the 4-hour chart, defined by the 200-day moving average and the 100-hour moving average. That's these two lines right here, defined by the green line, which represents a 200-hour moving average. We also went below the 50% retracement of this non-trending range that we've seen over the last 14 trading days. Now, it's 14 trading days, it's seen the price move above and below the 50% retracement line at the 111.14 level. So we're 15 level. So we're seeing we're seeing sort of the same pattern that we saw off the daily chart. Some moves to the upside through here, some moves to the downside here, outside of the range, but most of the activity taking place in between. So if I were to just look at this hourly chart, what would we want to see happen off the hourly chart? Well, I would say that we'd want to see the price remain below these moving average levels. These moving averages come in at the 110.97 level to the 110.79 level. As long as the price doesn't go above those areas, we would be more bearish. If we went above it, then we'd look for the price to move higher, of course. And so that is the area that we'd be interested in. Now, if we were to add the line from the daily chart at the 110.15 or 111.15 level, then we could say that in next week's trading, this area would be the neutral zone. A move above this area would be more bullish, and we'd want to see the price move above that. Or a move below and staying below this level and then move below the yellow line over here would be more bearish. So this is the way to the bull side, this is the way to the bearish side, and that's how I'd look at it. So in this yellow area right here between 111.15 and 110.79-ish, it's neutral. We can go either way around all these moving average lines. It would be doing what I did in the trading this week, move above, move below, move above, move below. But at some point or another, we're going to break, and we're going to look for that break, because when it breaks, that's when we trend. And so we're going into the weekend a little bit more bearish below all these moving average lines, below the levels off our daily chart, and we'll look for further downside potential in early next week's trading. Does it make sense to you? I hope it does. My name is Greg Michalowski, giving you a technical look at the euro versus US dollar as we head into the new trading week. Good fortune with your trading. Bye-bye now.